Have you ever wanted to own shares in companies like Safaricom, KCB, Equity Bank, but had no idea where to start? Maybe you've heard people making money from dividends or even the rise in share prices, but buying shares feels complicated for you and you do not know where to start. In this video today, I will show you how to buy shares in Kenya step by step. Even if you are a complete beginner, I hope you will be able to grasp a concept and to go ahead and be a shareholder. Welcome to Build Your Wealth Hub. If you're new here, this channel is about helping you to build wealth through smart investing and making better financial decisions. If that is something you're interested in, consider to hit the subscribe button. So I'm going to explain first of all what is a share for those who might not have a clue. A share represents a small ownership or stake of a company, and as a shareholder you may earn through two ways if you hold a share. First is through capital gains, and that is when the price of the share increases, and secondly is from dividends. When the company declares dividends from their profits, they pay their shareholders a certain amount of money in form of dividends. As a shareholder, for example, if Safaricom was divided into millions of small pieces, as a shareholder, if you buy one share, it means you own a piece of Safaricom. That is in layman's language. So why should you invest in shares as a form of building your wealth? The first reason is that shares has potential for long-term wealth growth, and you can also earn dividend income in form of passive income. Also, from investing in shares, you can get protection over inflation over time. The other reason why shares is good in building wealth is the opportunity to own part of a successful business. When you are saying that you own, a company like Safaricom, it is such a privilege to be a shareholder, to be involved in the annual general meetings because you are a part owner of that company. So one important thing that I have to mention is that the share prices can go up as well as down. They don't just go up. So if you invest and you find that the prices are going down, don't panic. I would advise that you invest in shares with a long-term mindset of building wealth. Yeah. So what do you need before buying shares? When you want to open your central depository account, you may need some few documents such as your passport or national ID. You will need your KRA PIN. You will need your bank account, a CDS account, which is a central depository system, and a licensed broker or an investment bank. For the CDS, it is a bank account where you now hold your shares. So this one, you get it from a broker, and all of them are intertwined in a way because you need a broker for a CDS. You need your ID, KRA, and your passport to get the CDS. And all of them are interrelated for you to start to buy shares in Kenya. One positive thing to note is that many brokers nowadays allow you to open your account online, and that is what I also did. You don't have to physically go to the offices and to physically carry your IDs and all that, but you can do it online at the comfort of your house or wherever you are. In the next section, let us look at the step-by-step process of how you can buy a share. So the first step is you choose a licensed broker, and a licensed broker means that they should be listed under the Capital Market Authority. Because we want to build our wealth, we want to also protect our money. So you don't want to be going to a person who claims to be a broker if they are not listed under the Capital Market Authority, you will have to take a step back and, be careful, because this is your hard-earned money. And after you've chosen your licensed broker, they will help you to open a CDS account. So this is important, because even someone like me, as a finance educator, I cannot open a CDS account for you because I am not a broker in any way. Many people have come to me to help them to open a CDS account, but I will normally direct them to the right channel. When you have your CDS account, you can now go ahead and fund your account. It is, you will have a pay bill number to send money to that account, and it is straightforward. You can see your transfer, and if you check your account, you can see your money in the CDS account. The fourth step is that you will research the company before you invest in it. Before you buy those shares in Equity Bank, you want to know how Equity has been performing, because this is something considered high risk. You don't want to be buying shares in any company because there are so many companies listed, So you research the company that you want to invest in, and you may consider factors like the profitability of the company, the dividend history of the company, the debt levels, and even the future prospects of the company. If you are satisfied, you can go ahead and place your bid, which is now buying the shares of that company. In that step, there are two types of orders when you're placing your order, which is a market order and a limit order. So the market order briefly is you want to buy the share at the current amount in the market. You don't want to bid for it. Like if the market is selling the share at 70 shillings, you want to get it at 70, but the limit, you are like, there is a limit. Maybe the lowest was bought at 60 and the highest was 70. So in the limit order, you can at least say 65 to see if someone will be interested in your offer. The next step is you wait for execution. Once your order or your bid goes through, the next step is you monitor your investment without checking the changes in prices daily, because if you keep checking, you may have headache. There is a specific company I bought shares in, and since I bought that shares, it has always been red. For about 6 months, it has been red and red. I was even regretting why I bought. But my main reason why I bought from that company was because of dividends. So I have been waiting for the prices to go up for me to get the capital gains. But there is a point I almost sold all the shares. When you have the shares, you can sell and buy, So when I want to sell it, I feel like, no, let me just give it one more chance. Recently, the share prices in that particular company skyrocketed, and I'm like, at least I did not sell it. So that is when I learned this, that I don't need to be checking the prices daily, because that can lead you to making rash decisions which can be against you and your goals as an investor. So that leads me to some of the common beginner mistakes that we make after we buy shares. First one is buying based on rumors. We also invest money that we need it soon. Another mistake is putting all your money in one company. It is better to diversify your money in several companies so that if one goes down, another one is up, and it balances your portfolio. The fourth mistake is chasing yesterday's best performing stock. You need to know that the market is volatile. Today the stock will be performing well, and tomorrow it might not. Another mistake is panic selling during market declines, and that is what I almost did with that company. How much do you need for you to invest in shares? I will say this time and again that you do not need millions to buy shares. The amount you need depends on the share price and the broker's requirements, because there is a brokerage fee that you pay anytime that you buy shares. That's important to note. And also, the minimum amount of shares that you can buy is 1. It used to be 100, which would make the amount required a bit high, but nowadays you can even buy 1 share. And remember, there are shares that go for less than 10 shillings. So if, for example, you have 100 shillings, you can own even 10 shares of a company, because if the share is going for 5 bob, that is 20 shares. Okay, maybe 18 because of the brokerage fee and all that. It is often better to start small while you are learning. As you grow and increase the amount of shares and companies. The best time to start investing in shares is when you've built an emergency fund. Remember, if you buy shares, the money is not as liquid as the one in a money market fund or a bank account. So I would encourage that you have an emergency fund, so that in case of anything, you have a buffer. And then you understand what you are buying before you start buying shares. Investing is not about timing the market perfectly. It is about staying invested over a long time and being consistent even in the small steps. So if this video helped you to understand how to buy shares in Kenya, please consider giving it a thumbs up. And I'd like to know in the comments, which company would you like to own shares in the first? For me, it was Safaricom. I really wanted to own shares in Safaricom. Yeah, let me know in the comments. What about you? In my next video, I will show you how to choose the right shares instead of buying based on hype. So make sure you're subscribed for that. Thank you for watching and see you next time. Bye.